Greetings, Algo Artisans. We're going to jump straight into the charts and take a look at what I think Bitcoin is going to do over the next maybe few days. Could be sooner, could be later. Basically, we're seeing a little bit of a pullback, and people have explanations, BlackRock this or whatever that. The reality is, if you watch the videos yesterday and the day before, Bitcoin was at a long-term resistance and was not able to make it up above that. However, Bitcoin rarely ever just simply goes up and comes back down. So we're going to talk about what that looks like here. Very briefly here, actually. We're going to do it right now. So look at what happened on the for the ETF announcement, right? And once we get this particular chart looked at, I'm actually going to zoom way out. We're going to look at some very old data and see how things have happened over history as well. But right here and now, you can see it. We saw Bitcoin go from 43,300, and it made its way up to about 47,000. And it went back and forth. It went back and forth for about a week. And it just stayed up there more or less, tried to rally up, and then came down. And it went down from, what was this? 49,000 basically. And it went down to about 42,000. So rarely does Bitcoin do this thing where it just simply shoots up and then comes back down immediately. This is not how Bitcoin operates. And this example I just showed you over here is a clear example of why, or at least how, that is not the case. And I don't believe this is going to be any different. As we can see right now, Bitcoin did come up, and for about a week it hung out right where it is, and it has come down a little bit. However, this move up is not really news related. Bitcoin is just bullish, as we've talked about in prior shows. So we're gonna go, like I said, through the history of the charts, and that's why today's show is called When Will Bitcoin Go Back Up? Sooner than you might think.
You really think you have a chance against us, Mr. Cowboy?
Yippee-ki-yay, mother...
Before we get into that, please like, subscribe, hit the notification bell, follow me on YouTube, follow me on X, follow me wherever you can. Follow me, it helps me get more content out to you. So, as promised, we're going to go back into history, and we're going to take a look at some pretty old data here. Now, this is what's called a log chart. Okay, so what does the chart really look like? It looks like this, where basically you had Bitcoin start out at a very low price, and it took over a decade to get past where it basically was like $1 or something like this. So all this price on the left-hand side, you can barely even see it compared to the current price right now because Bitcoin has grown exponentially. But if I hit the log button, what that does is that allows us to look at the trends even back when when Bitcoin was rotating between 1 penny and $2 and very small price changes compared to now. And this just flattens everything out and kind of makes it just a little bit more congruent, so we can go ahead and do some analysis based on past events. And what I've done here is you can see these 4 yellow lines. These are the halving events. The fourth one hasn't happened yet, and it's estimated to happen in April, and it's not on a calendar per se. These halving events happened. They have to do with blocks, right? So when a certain block gets mined, then the halving happens. The Bitcoin rewards get cut in half. The amount of Bitcoin going into the market is cut in half for every mined block. That's the whole premise behind Bitcoin, really. One of the main metrics behind Bitcoin. So we can talk about the halving on another show, but suffice it to say, we can look back at 3 halvings in history here to see how price behaved. Now, one thing we have to be careful about, in the spirit of backtesting and data, which is really my specialty, is data and backtesting. When you're looking at old data to try to predict new data, the more data you have, the better, okay? So when you only have a few data points, it's not really that reliable of a data set to try to predict the future. Think of it this way. You see something happen 3 times, and you're like, oh, well, the next time's going to be the same. Maybe. But if you've seen it happen 123 times, and 95% of the time it's happened a certain way, then you actually have a reliable 95% degree of statistical certainty where this is going to happen again. But only 3 times? That's just not a lot of events. We don't have a whole lot of data to go on, but it's still 3 data points over a 10-year period. And given the fundamental nature of Bitcoin and how it operates, we can make some reasonable inferences as to how it might behave, right? So the first halving happened in November 28th in 2012. What we can do is take a look at the pullbacks that happened just before and just after this halving. And let's go ahead and zoom. We're going to drop to a lower time frame on this, and we're going to zoom into November of 2012. And we can see here that Bitcoin running up to the halving, it moved up nicely, right? Let's take a look at some percentages. We're going to use a tool that TradingView provides, and we'll be able to do a little bit of very basic math. Leading up to the halving, the bottom of Bitcoin back in 2012 was $9.75, and over a few months it went up 30%, up to $12.63, right? Right before the halving, it fell 5%. So went up 30%, fell 5%, and then the halving happened and price kept going up. And then you had some pullbacks on the way. And even on the way up to this, you can see there were pullbacks. There was a 4%. You had a pullback here of 3.5%. You had this 6% pullback. So we can see that these pullbacks are occurring quite regularly. So the next halving is going to be in 2016. So let's go ahead and move our calendar up to 2016. And I believe that was in June. Okay, so we'll go to June. Okay, and here's our second halving. Now this was quite the pullback before the June halving. Okay, so we have price go from the low a few months before that in May from $400 and it moved up to $800. So that was an 80%, so almost a double. And then the pullback before the halving was 30%. That was a 30% pullback, and that was in the same month as the halving. Okay, and price ended up having a complete pullback, almost down back to where it was prior, here a few months before. So it pulled back ultimately 40%. So we had a 40% pullback. That's pretty big. And even on the way, you'll see there were these little pullbacks here of 10%, 8%, so 8%, and then a big 30% pullback. And that's about the time, I got into crypto after this halving, right? Now we'll go to the most recent halving in, 2020. So here it is. And leading up to May, there was a low, and that did take a few months, just like every halving so far. This is how we analyze data. The low was in March, the halving was in May, and price moved up 150% on the way up. And then the pullback just after the halving, or just before the halving, and right before the halving, that was a 20% pullback. So we're seeing pullbacks as big as 30%, 20%. We're having double-digit pullbacks right before the halving, right? And we are now in February, and the halving is supposed to be in about a month and a half. Seeing a 20%, 30% pullback, that's very, very normal and reasonable. So let's go to the modern day. The halving is in a few months. There was a pullback right here. In January, we're going to see a move up. Now, we've seen moves up as high as 80, 100, 180%, 80%, big moves up. So price could even break all-time high before the halving if we're looking at a move up that is comparable to the prior moves up. I mean, we saw an 80%, we saw 180% move up. And in fact, over the years, it seems as if the move up before the halving is growing. We don't really have enough data for that. And things are kind of expanding more slowly. But there is even time for price to move up prior to the halving, even with this little pullback we're seeing right now. So let's just say, price goes up to maybe 58,000. Let's just pick a number, right? I do have some data around 58,000, but let's just pick a number and say that it goes there. Now, we've seen these little pullbacks, right? We've seen 3%, 5%, 30%. So let's say that we see a 30% pullback from where we are right now prior to the halving. 30% pullback, that takes us to like 35, 38,000. Completely reasonable. 38,000 is a 27% pullback. That is very reasonable, okay? So if price to come down here, people would be freaking out. Bitcoin is 52,000, now it's 38,000. People might trip out. People might sell. It's called a shakeout. This is the way that markets work. The big money knows that a big run up is coming, and they're going to shake out people. Now, it might only come down to 48,000. It might come down to 42,000. In fact, I like 42,000. I don't have any preference for 42,000. I just have 42,000 as a very likely place for price to go right now, and that's based on liquidity. In fact, the real number, if I got it written down here, is 42,600. That's where the most likely place in my mind, not in my mind, it's really for my data, is that's where I think price will go, but it may not make it there. Bitcoin's hyper bullish. Things are a little bit different with the institutional money coming in, but we've seen 20 and 30% pullbacks prior to the halving, and that would take us down to 42,000. Before we get too scared, understand the price tends to run up into the halving even after a pullback, and then it might kind of fall a little bit and then keep going up. We might see all-time highs very quickly, and we might even see them before the halving. But the message here is don't freak out. These pullbacks are actually healthy. If you don't get a pullback, the longer you wait for a pullback, the deeper and crazier those pullbacks are. So we want the pullbacks because then it creates stability in price. Okay, so that is just a quick way of showing you how you can go back, look at data, and see what kind of pullbacks are reasonable. And I can tell you right now, 42,600 has a lot of liquidity down there based on the Kingfisher. We've talked about this in other videos, so understand price could easily come down there. Now, it may not go down at all. It could just hang out up here, and price could range back and forth and and go up. We don't have any guarantee price is going to do anything, but a pullback to 42,000 is pretty realistic right now. But it may not do that. It might only pull back to 49, 48, something like that. We just don't know. The message here, though, is don't get scared. Don't get scared. This stuff, these pullbacks are often designed to get people to sell out, right? They're often designed to get people to get scared and sell. And when you sell, the big money is buying. When you sell and the price goes down in a heavy and fast way, the big money is filling up their bags. So do you want to act like small money? Do you want to act like big money? And that's the question you got to ask yourself. If you come over to algofactory.tech, you can act like the big money, right? You can understand a little bit more about what the big money is doing, because Vee the Gorilla, my business partner in algofactory.tech, he talks to the big money. He does the Bitcoin deals for the big money. He knows what the large funds are thinking, and he tells us, and he generally tells us once a week on Thursdays in the Drips session. Okay, so please come on in, algofactory.tech. We hope to see you in there. In the meantime, trade your job, upgrade your life. We'll see you on the next one. All right, hope you enjoyed the show. Please like, subscribe, hit that notification bell. On the screen there, you can see our website, algofactory.tech. Tap that QR code to take you straight there. I'm also very active on X. That's algo_factory777. We got TikTok and Rumble. In the meantime, we hope to see you over at the website. Come on over, trade your job, upgrade your life. We'll see you there.